Greetings, this is Miles from Milestone Investing, and I want to give you an update on the performance of Hargreaves Lansdown after it paid a dividend. So, what have we got here? Wednesday, the 21st of September, was the qualification date, the last date on which you could actually purchase the shares with the intention of getting those dividends. And so what happened? We can see that these are 15-minute charts. So this is the beginning of the day, this is the end of the day where the blue line ends. These vertical blues cut off each day. So what have we got? We've got the share price rising from a low point to a high point on the qualification day. Went from 630.6p all the way to 895.5p. And that was the trajectory of the share price on the Wednesday. On the Thursday, it dropped. And based on my bullish calculations, the drop zone is between this ceiling and this floor. Had we been in a bearish market, it would have dropped down into this drop zone, this ceiling, this floor, based on my calculations. So what happened? It dropped down into the bullish zone, stayed there for, an hour or so, and then it basically fell and it kept on falling. And so by the end of Thursday, the ex-dividend date, it had basically fallen as low as the lowest point on the Wednesday. On the Friday, it was bouncing around that same point, and then it dropped heavily, and then it recovered. So it found some invisible support. It didn't fall quite as low as the bearish drop zone, but it found an invisible support just about here, and then bounced off that. And that was a Friday. On Monday, so day 1, day 2, Monday is now day 5 after the day 0 qualification date. It basically opens up here, falls up, down, and then it starts to roar upwards on the Monday. Then on Tuesday, it gapped up and it basically hovered just below the highest point of the Wednesday. And then by close of play on Tuesday, it breaks this line. I call this line the finishing line. Why do I give it that name? Because if it crosses the highest point of the qualification date, it means that everybody who went long, everyone who went long, got the opportunity to sell the shares and get their money back. And then Wednesday, today, it, fell, tried to recover on the upside, ran out of steam, fell more heavily. It hits the floor of the bullish drop zone and bounced off that and went further up, okay? And that was the movement for Wednesday, which is the 28th of September. So what was the outcome for investors? Well, this company was paying a dividend of 27.44p. Now, I'm going to assume, for my purpose of my calculation, I'm going to assume that we got the very worst price, the highest price, the ceiling price, which was 895.5. So you can see dividend 27.44, and the share price, I'm assuming we bought it at 895.5. That would have given us a dividend yield of 3%. If we had take out a derivative instrument, which allowed us to basically buy this with a 5% margin, i.e. 5% deposit, we would have paid 5% of this price, the share price, and received the full dividend. That would have given us a derivative yield of 61.3% for those people who can get that 5% margin, and they're usually the professional traders. For the non-professional traders, they typically can get 20% margins. They have to pay 20%. So for those who have to pay 20%, the 3% yield will jump up to 15%. So that would be what non-professionals could have gotten. So what does that mean? That means within 1 week, you picked up a dividend of between either 3%, 15%, or 61%, and you got your initial investment capital back on the Tuesday, less than 1 week afterwards. So here's what you did. You put down X amount of money, let's say £2,000, and you picked up a dividend, 3% on that 2,000, 61% on that 2,000, or 15% of that 2,000. You sold the shares, you got your money back at close of play on Tuesday. That was your opportunity right there. And then you walk away with your money back and that return on investment within a week. Now, where else can you pick up a 3% dividend in a week, or a 61% return in a week, or a 15% return in a week? Where else can you do that? Not many places, but that's what happened for the investors of Hargreaves Lansdown. This is Miles from Milestone Investing. Hope you found that useful. Take care.